welcome to another episode of Finance Friday. So recently this image trended, right? Because the terms for the loan was outrageous because the person was taking a loan of 1.3 million and the interest rate was 13% month on month. And so I quickly want to jump on this and let's talk about the terms for taking a loan. The reason why so many of us fall prey to loan sharks is because we don't understand the intricacies of taking a loan. I understand that when things are tough, when you need someone to save you immediately in terms of finances, it is only these loan sharks that comes to your aid, which is why I often always reiterate the need to have an emergency fund. If you don't have emergency savings, almost every time you need financial bailout, you will always turn to a loan shark. Okay, so today we want to talk about the terms, right, for accessing a loan. I've recently done a video about good debt, bad debt. If you haven't seen it, you should go look for it. So the person took a loan of 1.3 million at 13% monthly interest, 13 point something monthly. That would rise up to as much as 156% if it was a loan for 12 months, so over 100% in terms of repayment. Now what happens is that the person begins to slave for the lenders, which is not healthy. It is not healthy because you will not be able to pay back the loan, and those people would always often fall into the category of people who default on their loans and then have these loan sharks call everybody on their phone contacts to tell them that they owe them money, or to begin one form of threat or the other. That said, let's run into the very first thing to look out for when you are taking a loan. The very first thing is, number one, the percentage interest. Now remember that in this image that we are considering here, this is the 13% you can see is talking about the amount that is going to be paid extra, right? This is not the fees or any other thing. That is just the interest rate, right? It's 13% on this case study we are examining now. It means that apart from the amount you are required to pay when they break down that 1.3 million into 6 months, which is 325,000, you are expected to pay an additional 169,000 every month. That is amounting to 494,000 every month, and in 6 months that person would have paid almost half the amount that you have requested for in loans as interest. So it is very important that you take note on how much is the percentage you are requested to pay back. So because if you are taking a loan, the first thing you consider is the interest rate, because that's the extra you'll be required to pay on top of the pieces of the money you are paid at every repayment date. And also take note if the interest is monthly or annually, right? Because if it is monthly, you also need to be very careful on the rates. So the higher the rates, the more the amount you are expected to pay back, which means that the loan is more expensive. Interest rate, right, determines how expensive the loan is. You cannot compare the person who is taking a loan of 2% every month for a year to the person who is taking a loan of 13% and per annum, or per year on the same amount of loan. So while that person is only expected to pay, let's say, 169,000 for the lifetime of that loan, you will pay 2 times 12, that's 24%. That is, you are paying way more, right, than the person who is taking the loan, even though you are taking a loan for 1 year. If A takes a loan for 1.3 million at 2% every month for 1 year, and B takes a loan of 1.3 million at a simple interest of 13%, which is once, that interest rate is paid once for the lifetime of the loan, right? That person who took a loan of 1 year and paid 13% only once is assessing the loan at a cheaper rate than the person who is taking a loan of 1.3 million and is paying 2% of that money every month. Okay, so it is very important to take note of the interest rates on each of the loans, on every loan that you apply to take. That is one of the things that you consider that will determine if you can pay back in the time that has been stipulated. It is one of the reasons why people default on loans. Number two thing you should consider when you are taking a loan is the tenure of the loan. Remember, I had mentioned something about the lifetime of the loan. So the person who takes a loan for 3 months, it means that you are expected to repay the loan in full by the end of the 3 months. There is often a repayment date. So at the stipulated date every month, you are expected to make a certain portion of the amount that was borrowed, inclusive of the interest on the loan, is made at that time of the month every year. Now, why is it important to take note of the tenure? It depends on what you're taking a loan for. So if, for instance, it is a life-threatening emergency, right? You will need some time to be able to go through that phase and to begin to make payments in bits, depending on your income, the capacity of your income, because it would not be wise to spend all of your income in a month, right? Every month you pay 100% of all that you earn to repay the loan. So it is very, very important that you calculate properly if you would be able to make the total payment without stress, either in 3 months or in 6 months or in 12 months. Now, there are loans that are expected to be paid in a month. There are some that has as much as 3 months. There are some that is 6 months. There are some that is 12 months. And then there are some that are open for up to 3 years. All of that is dependent on the terms that is stipulated at the time that you are taking the loan. One thing that must be off when you are taking a tenor, or when you are selecting or choosing a tenor for the loan that you are applying for, is that the shorter the lifetime of the loan or the tenor for the loan is, the more amount you are required to pay at every repayment date, but the less or the cheaper the interest rate. The opposite is the case when the loan is longer. So if you take a loan for 12 months, the interest rate will be higher, but you will get to pay in smaller bits. Versus when you take a loan for 3 months, the interest is smaller, but you are going to be required to pay higher percentage of the amount that is due at every repayment. Okay, now the number 3 thing to consider when you are applying to take a personal loan is the fees and charges. It is very, very important. That is where some of these loan sharks, they hide the fine print. You don't consider it, because sometimes you might be in a hurry to access the loans that you are not even concerned to see what other things you are being made to pay for. Now, some of the fees and charges are usually attached to loans, right, could include things like administrative fees, withdrawal fee, late payment fine, and all of these things like administrative and withdrawal fees are actually added on the loan. So if, for instance, you want to take a loan of 200,000, you apply for 200,000, 200 will be approved for you. However, you will not get exactly 200,000. In closing, I highlighted 3 things that you should consider when you're looking to take a loan. The first thing is to consider the interest rate on the loan. How much are you expected to pay back? Is this interest going to be calculated monthly, or is it going to be calculated once? Second thing to think about is the tenure for the loan. How long do I have before I pay back? Note that if you are taking a shorter time frame, the amount that you pay at this repayment date will be high. However, the interest rate will be lower. And the reverse is the case when the tenure or the lifetime for the loan is higher. So if you do 12 months, you pay smaller bits every month at a higher interest rate, as against paying larger chunks every month for 3 months at a lower interest rate. So it depends on you, depends on depends on what you can afford, right? Then the last thing to consider is the fees and the charges. You need to be certain of what is being added on to the loan that you are taking, because the loan companies, apart from the interest that's attached to the amount you are taking out as loan, they also have other things that they consider to make a profit on the loans. If you have taken down and noted all I have said in this video, the 3 points I covered, it would help you with making smarter decisions when you are about to take out personal loans. Cheers.